Good morning, it's Monday the 31st of January and welcome to Atlantic Capital Markets roundup of the coming week's economic highlights. As always, we'll start with a quick summary of the key macro data points coming up this week in the world's markets, and we'll then take a look in more detail at some of the bigger stories straight afterwards. So, straight to business. So, let's take a look at the economic numbers being issued this week. And starting today, we'll be hearing the update of GDP in the Eurozone and the latest inflation figures from Germany. Now, this week is a big week for interest rate decisions, and in the key economies, Tuesday brings us the first with the Reserve Bank of Australia's decision for the month. We'll also be hearing how retail sales are getting on down under. Tuesday also brings us German retail figures, Eurozone manufacturing PMIs and UK manufacturing PMIs, and GDP in Canada, and over in the US, the ISM manufacturing figures. Well, the topic on many people's lips is inflation. And we'll hear on Wednesday how it's faring in the Eurozone. We'll also hear the latest US ADP payrolls. Continuing the week's focus on interest rates, on Thursday we'll hear the latest decisions from both the Bank of England and the European Central Bank. We'll discuss both of these in more detail shortly. Thursday also brings us the composite service PMI figures for the UK and the Eurozone. And over in the US, the jobless claims, the ISM non-manufacturing figures and the factory orders. Finally, on Friday, we'll hear the latest US non-farm payroll figures, as well as the latest statement from the RBA, and the Eurozone retail sales figures and the unemployment statistics over in Canada. And the companies that we'll hear updates from this week are as follows. On Monday, we'll hear from S3. On Tuesday, it's the turn of Google owner Alphabet over in the US to discuss their Q4 2021 earnings, and in light of a 20% fall in their share price, we'll be discussing this in more detail in a moment. On Tuesday, we'll also hear from Virgin Money, and over in the US, ExxonMobil, General Motors and Starbucks. Wednesday, it's telecoms giant Vodafone's turn to update us on their Q3 earnings, and that's a story that we'll discuss in more detail shortly. And we'll also be hearing from Glencore, Severn Trent, and over in the US, Qualcomm and Meta. And finally, Thursday brings us Q4 results and an interim dividend announcement from Shell, and also Q4s from Amazon in the US, two commercial behemoths that we'll discuss in a moment. And Thursday also brings us results from BT, Renishaw and Ford. So after the Fed and the Bank of Canada both indicated towards March rate hikes last week, this week it's a turn of Australia, the Bank of England and the European central banks. Well, the ECB is expected to be less dovish and the Bank of England more hawkish. US earnings season continues, and after impressive numbers from Apple, attention will now be on the other big tech giants, Amazon, Alphabet and Facebook owner Meta this week. International geopolitics also remain a key issue, as developments over the Russia-Ukraine situation will be closely monitored, as Russia amasses over 100,000 troops on Ukraine's border as fears of invasion grow. Tensions have lifted oil prices ahead of the OPEC Plus meeting. So, in light of these hovering issues, let's take a look at some of the big stories in this week's diary. On Tuesday, Alphabet will report Q4 earnings after the close, and as the stock has tumbled 20% from its November high amidst a broader tech sell-off. However, the share price is still up over 30% across the past 12 months. Alphabet is expected to report solid earnings, with earnings per share of $27.40, down from $27.99, on revenues of $72 billion, and that's up from $65 billion. Revenue continues to be driven by growth in its search engine division, particularly its mobile search element. Investors will be looking to see whether Google will increase spending around its cloud or Waymo autonomous driving business, or whether it will look to increase in AI or its virtual intelligence units, particularly in light of Microsoft's acquisition of Activation Blizzard. On Wednesday, Vodafone releases its Q3 earnings. Now, the company's revenue has struggled to pick up in recent years, particularly as travel restrictions meant that roaming charges tumbled. However, there are some signs that this is starting to change as restrictions are eased and after decent half-year results. The telecoms giant has upped its earnings target for the year, and there have been plenty of headlines surrounding possible deals. The latest in M&A chatter came last week amidst reports that Vodafone made an approach to buy rival Three and is in talks with Italian group Iliad. Meanwhile, Vodafone has also been the target of private equity, which has sparked a small share rally. Some strong numbers could help quieten takeover talk. In the latest interest rate decision, the Bank of England voted 8-1 to raise interest rates by 0.1%. A move which caught the market off guard given the 7-2 vote to keep interest rates on hold the month before in November. However, with CPI inflation at 5.1% year-on-year in November, concerns amongst policymakers had clearly risen. Inflation continued to rise, reaching 5.4% in December, a three-decade high. Well, inflation is expected to continue rising, reaching possibly as much as 6% by April. Rising inflation expectations could see the Bank of England tempted to move again to hike rates on Thursday. Last week, market futures were pricing in an 87% probability of a rate hike. In the case of a rate hike, 0.5% is the rate level. The Bank of England have said that it will stop reinvesting in maturing bonds in the QE programme. BOE officials have been unusually quiet since the last meeting. So do keep an eye on the pound, bank stocks and the FTSE. Thursday also brings us the European Central Bank's interest rate decision. With the Fed moving closer to its first rate hike, all eyes are now on the ECB. Well, the ECB are not expected to lift interest rates, and neither is any hint towards rate hiking expected. But that said, the ECB's position towards inflation has still changed significantly over the past 6 months. The central bank has gone from calling surging prices temporary and warning against too low inflation to the doubling of its 2022 inflation forecast and warning of the upside risk to inflation. Even so, the Eurozone lacks the labour market tightness seen in the US and the UK. Inflation drivers are still mainly supply side rather than demand side. Hiking interest rates would do little to calm energy prices or shipping costs. No changes to the ECB's monetary policy stance are expected, putting the euro at a disadvantage compared to the pound or the dollar. So as a result, do keep an eye, of course, on the euro. And Thursday brings us Q4 results from the energy giant Shell. Surging oil prices are expected to be a plus, of course, to Shell, in addition to its growing cash pile. Shell has ridden a strong rise in oil prices, which are up 60% over the past 12 months. Consensus estimates point to Shell making a profit of $21 billion. That's up from $4.8 billion last year. In Q4 alone, profit is expected to come in at $8.8 billion versus $393 million. Cash flow rose to $6 billion in the July to September period, and oil prices have risen further since then. So the big question is, what will Shell do with all that cash? Well, the transition to becoming a green machine will be in focus, as well as dividends and share buybacks. And finally, Amazon is also due to report after the close on Thursday. Amazon saw demand surge across the pandemic. Now, despite the reopening of the economy, demand remains strong. In Q3, net sales increased 15% from the same period the year before, and this was down significantly from the 37% growth achieved in 2020. But that was in the worst phase of the pandemic when most shops were closed. However, the fact that Amazon is still recording double-digit growth from an already solid base is impressive. Q4 revenue is expected to see growth of between 4 to 12%. In Q4, costs are expected to have increased owing to staff shortages, higher wage costs and supply chain issues, in addition to higher shipping and freight costs. The higher costs mean that operating income is expected to drop to between $0 to $3 billion. Earnings per share forecast at $3.74 on revenues of $137.7 billion. Finally, Friday brings us the latest non-farm payroll figures from the US. Well, for the past 2 months, job creation in the US has been slower than anticipated. The latest report revealed that 199,000 jobs were added in December, and that's the lowest level in 11 months, and down significantly from 249,000 jobs that were added in November. Expectations had been for 400,000 jobs to have been added in December. Whilst the headline figure was disappointing, the unemployment rate was more encouraging, dropping to 3.9%, down from 4.2%, only marginally above levels seen before the virus struck in 2020. Looking ahead, expectations are for 238,000 jobs to have been added in January, and the unemployment rate is expected to stay steady at around 3.9%. So do keep an eye on the US dollar and US indices. So those were the big stories in detail. Let's wrap up with a look at the dividends due this week. And it's another quiet week for the FTSE 100, but in the FTSE 250, we'll be hearing from IG Group, Edinburgh Investments and GCP Infrastructure Investments. So those are the highlights coming up this week. If you're a new viewer of our regular videos, why not click on that subscribe button just to make sure you don't miss out on our regular market updates, and just as importantly, our special market analysis videos as soon as they're released. And of course, if you're interested in the markets, as always, do let me remind you about our very powerful app, which you can download from the App Store to your mobile phone. And why not check it out? It's worth a look. So until next time, from all of us here at Atlantic Capital Markets, have yourself a great week.